Hello, everyone. Thanks for joining and welcome back to Wall Street Silver. Our guest today is my friend Peter Boockvar. Peter is the Chief Investment Officer with the BLY Advisory Group. Welcome back, Peter.
Good to see you, Ivan.
Yeah, it's great having you on Wall Street Silver. It's the start of a new year, 2025. I wanted to get you down to talk about everything that's happening in the global economy and gold, silver. Let's start off, I guess, with precious metals. Where do you see gold and where do you see precious metals going for 2025?
Well, what's most interesting, at least to start the year and even to end last year, is in the face of this very notable rise in interest rates, in the face of the Fed and other central banks cutting short-term interest rates, gold trading at around record highs. Also while the dollar is rallying against a variety of different fiat currencies, it's not rallying; it's actually falling against the price of gold, which tells me that debts and deficits actually matter, that gold is the standout performer in this type of environment because it's sort of the opposite of what you would think, which would be bullish. Usually, bullish is falling real rates and a weaker currency, and you have the exact opposite. So I think that that's very notable and tells me that we have another good setup for hopefully a good year in 2025 for both gold and silver.
Yeah, you absolutely nailed it, Peter, because a lot of people are talking online about, now it's 2025. They're expecting the Fed to actually reduce interest rates or at least ease off, any type of interest rates increases. And people are expecting, I guess, a weaker US dollar if they are going to reduce interest rates, and that will be bullish for precious metals. Do you think they are going to reduce interest rates for the Fed? What do you think that plays out like?
Well, I think we're at the point where, well, let's look at what market pricing is right now. The Fed funds futures market's not pricing in another rate cut until October. Now, from the perspective of the Fed, I think we've reached a point where they can't ignore this move in the long end. Powell, in two press conferences in a row, was rather dismissive of the market's reaction to its cuts. I can't imagine him being still dismissive. So I think we're at the point where if they are going to cut, it's because the economy has taken a leg lower and the unemployment rate has jumped. I don't think some benign inflation numbers will be enough in order to get them to. Now, we're going into the CPI and PPI data this week. I think bonds are very oversold. I wouldn't be surprised if we had some benign data. We had a little bond rally, but the sustainability of that, I think, could keep the Fed on its hands unless, as I said, we get a downturn in the economy and the unemployment rate jumps from here. I don't think a few tenths deceleration in inflation is going to be enough for them to cut anytime soon. Will they cut again at some point? I'm sure they'll try.
Right.
There's still going to be doves in the committee, offset by some hawks. But I think right now they're in a long-term pause moment.
What's concerning you, Peter, about the markets right now? Like, is it the repo market? Is it the commercial real estate market? Like, what do you have an eye on, and what's concerning you?
Biggest concern should be the sovereign bond market and this rise in interest rates. And it's like the global bond police is driving around different country neighborhoods and calling out those that have too much debts and deficits. Look at the UK, look at France, look at the Japanese. Now, Japanese are actually interesting here, and I think the BOJ is also a factor here in this rise in rates because the BOJ is expected to raise interest rates this month. In addition to QE is being tapered in Japan, some of that being ignored by market participants, even though I think the bond market has woken up to this fact. And I think that's one of the influences on this rise in interest rates.
There's about $15 trillion worth of physical gold in the world sitting there costing money rather than being used is just absolutely insane. Monetary Metals is bringing gold back into the financial world, putting gold to productive use right now. The problem with gold, of course, in physical form is that it's heavy, it's cumbersome, it's not particularly easy to ship, and it costs money to store in a protected manner. This platform Monetary Metals created is a proven concept and allows gold to be put to productive use. So instead of sitting there costing you money, it's actually in use earning you money.
Learn how you can earn 2 to 5% in our leasing program and how accredited investors can earn up to 12% on silver paid in silver. This advertisement is not investment or financial advice. Minimum investment applies.
From now until the first quarter of next year, and it began last year, The BOJ is cutting its QE, its so-called asset purchases, in half. And I think
Wow.
that's also a factor in this global rise in interest rates.
And a lot of people, I guess, are talking online about, uh, the current global economic, atmosphere, with all these wars going on and all these continuous wars and all this, the depreciation of the dollar. Like, look at what's happening in Canada. Look what's happening across the world as the currencies are starting to depreciate like crazy compared to the US dollar. We know your main concerns, but where would you put your money right now, Peter?
Well, speaking as a CIO and an investor for client money, we talked about gold and silver, but I think other commodities are pretty attractive, particularly oil and gas stocks. In the second half of last year, we started buying the fertilizer stocks. They actually got a lift today, thanks to a 1 year plus high in the price of corn. Soybean prices were up 3% today, I think, lifting off the lows. I think the ag space and the fertilizer space is very attractive. Recently bought platinum as a new metal to buy.
Wow.
The shift to hybrids is winning out over the shift to the full EVs, and hybrids use as much or more platinum in their catalytic converters. Platinum's half of what it was about 10 years ago. So to me, that's a pretty attractive one. And on the belief that Southern California is going to rebuild, we bought on Friday Weyerhaeuser, the largest timberland owner in the country, where a lot of this timberland is going to be used for lumber to rebuild a lot of these homes. Hopefully that happens sooner rather than later, but we understand that there's a whole cleanup process. We got to put out fully the fires, but we're optimistic that California residents are going to want to stay and are going to want to rebuild instead of moving elsewhere.
Yeah, absolutely. And what do you think about this upcoming administration? Do you think they can reduce deficits, and how will that look like? Because a lot of people I've interviewed, they're saying if you're cutting spending, you're cutting, and if you're reducing deficits, it's not enough to, cure what's happening right now in the markets. What do you think about this upcoming administration? Can they fix anything?
I'm hopeful that they can, but I think that the reality of the numbers just makes it a challenge.
Right.
85% of government spending is the mandatory side, defense spending, and interest expense. So there's only that 15% that finances government agencies and some other things. So now, can they make improvements? Absolutely, and I welcome it. I'm just not sure if it's enough to move the needle. We have to try, and this is a good first step. And not only that, but the key too is going to be slowing the rate of government spending.
Right.
We'll never see a cut in government spending. That will never happen. It's a question of slowing the pace of the spending increases to something closer to, a 2%, 3% type growth rate that will at least hopefully stem the rise in the deficit relative to GDP, because a 6 to 7% level in an economic expansion with the unemployment rate in the low 4% is just totally unacceptable. And we're seeing the Treasury market certainly calling them out on that.
Hello, my fellow silver and gold stacker. I just wanted to say thank you so much for watching the channel. Subscribe, please like the video, and also hit the notification bell. Keep stacking. Yeah, absolutely. Now, Bleakley Advisory Group, for all of our new viewers and everyone who's new to Peter and what you guys do, what does Bleakley Advisory Group do, and what are the benefits that you guys offer?
Well, technically, we actually tweaked the name to BLY Financial Group, but
Bleakley Financial Group.
yeah, it's a pretty straightforward wealth management firm with about 55 different financial advisors, most that are based in New Jersey, but we have offices in other cities throughout the country.
Nice.
And we provide clients with guidance on both on the asset management side, the estate planning side, and any other financial need that they may have.
So now, as an individual investor like myself in Canada, could I get into the Bleakley Financial Group, and could you guys advise an individual investor, or is it for bigger clients? How does that work?
No, it's clients of all sizes. Whether
Okay.
you're somebody fresh out of college who needs some hand holding, just starting to make money, has created a 401k or through their company, retirement account, all the way up to somebody older who just sold their business, or a retiree who need some guidance on how to manage their retirement. It's a variety of different characteristics and financial needs and incomes.
Absolutely. Now, before you go, Peter, I'd love for people to connect with you. I really want them to, follow your work and what you do. Where can people connect with you?
So on a daily basis, as you see every day, Ivan, I publish on the macro and markets and the economy via a Substack page. It's called the Book Report, but someone can type in my name and they can see it, they can trial it and see if they find it worth their while. I think it's an institutional level product that is being sold at a retail price, and that anybody involved in the markets, whether it's professionally or just as an observer, would get a lot out of it.
Now, what would be your last words of wisdom for everyone watching right now? People are so worried about the financial state of just their savings accounts and, just they want to protect their wealth and they want to protect their savings. So what would your last piece of advice be for them?
I think with this persistent higher for longer level of interest rates and long end yields that we've seen rise dramatically since last September, I think investors need to be more valuation sensitive.
Right.
When on the belief that, okay, the Fed's going to cut rates and save us all, and yields are going to drop across the yield curve, and it's going to bail out commercial real estate, and so on and so on. Investors the last couple of years became, very valuation agnostic, particularly with the biggest Mag 7 stocks that we all know about. But with rates doing what they're doing, I think investors should just be more careful about what they pay for things.
Yeah, no, that's absolutely incredible advice. Peter, it's such a huge pleasure having you come down to Wall Street Silver. It is a breath of fresh air when you do come down to Wall Street Silver. So I want to thank you so much. And everyone watching, thank you so much. Please hit the like button, subscribe. But Peter, again, it's a huge pleasure having you come down.
Thanks, Ivan. I appreciate being on with you.
Talk to you soon.